On today's episode, I'm going to take a look at 4 stocks that I believe are in great markets and sitting at a great price right now. And unless something crazy happens in the market by the end of this week, I'm most likely going to purchase 2 out of these 4. All 4 of these stocks are hitting markets that I'm very bullish on. We're going to take a look at cloud, e-commerce, fintech, and cybersecurity. For each company, we're going to take a look at fundamentals, future growth. We're also going to take a look at some technicals and valuation metrics. So let's get started. First, we're going to take a look at Twilio. This is a company that helps developers build communication apps easily through their platforms. If you're trying to build an application to engage with your customers on any channel, on any time, Twilio is the product for you, right? You can do video conferencing, phone, messaging, email, text, anything, right? I'm pretty sure you guys have received some form of text message from a business. Let's say you bought something online, let's say you order something. Products like that is what Twilio works with. Twilio is traded under the New York Stock Exchange as ticker TWLO. Right now it's sitting at $309.91, and from its 52-week high, the stock is down about 30%, so it's definitely seen a crazy pullback since this overall correction, and it has a market cap of $53.52 billion. Analysts believe this company will grow its revenue 28.2% on average for the next 3 to 5 years, so this is a nice hyper growth stock in my opinion. Unfortunately, this company is not profitable, but they are positive in cash flow from operations, which is a good thing. If we take a look at their most recent balance sheet, they have pretty strong numbers: $5.7 billion of cash and short-term investments and $1.2 billion in debt. To be honest, this is what you want to see for a company that is not profitable, for them to have a very strong balance sheet at the moment to continue to innovate and continue to be able to fund their future growth. If we take a look at historical numbers, this company for the past 3 years has grown its revenue 55% in the most recent year of 2020, 74% on 2019, and 62.92% on 2018. So in the past 3 years, this company alone has grown its revenue over 50% each year. And I do believe this is a great market, right? Not every application is gonna do amazing, but new applications are being developed, and there's always the need of communicating with your consumer or your customer. The final thing I am enjoying about Twilio's fundamentals is they are improving their operating cash flow margins. We saw they were positive, but they are improving the margins. Right now sitting at about 1.85, where in 2017 it was actually negative 0.82. In the most recent quarter, the second thing they did announce is now they have more than 235 active customers compared to 190,000 a year ago. They also gave us guidance for Q2 of 2021, and they expect about a 47 to 50% year-over-year revenue growth. So again, this is continuing to show how much of a growth monster this company really is. Some recent news: on May 17th of 2021, Twilio is going to acquire Zipwhip, which is a leading provider of toll-free messaging in the United States. I do believe this is a smart acquisition because this is a market they're already in. Alright, so the second company we are going to take a look at is Shopify. But before we go there, guys, make sure to hit the thumbs up and subscribe. It really does help with the channel. And let me know in the comments below, what are some stocks you're planning on buying later this week? Alright, so for those that are not familiar with Shopify, this is the one platform you need to kind of run your business anywhere. So for example, let's say you have a brick and mortar store and you want to run an online business as well. Shopify is that platform, right? It allows you to integrate with different social platforms, with different e-commerce, with different websites, with different applications, and put your storefront on their sites. They also do a lot of backends like payments, capital, marketing, analytics, inventory and fulfillment, order management, and shipping. So you can see this is pretty much all you need for starting off a business. Shopify right now is traded under the New York Stock Exchange as ticker SHOP. It's currently sitting at $1,200. This is a bit expensive compared to some of the other stocks in form of current price value. But remember, if you are here in the United States and don't have a broker that has fractional shares, I definitely would suggest getting into one. Right now, from its 52-week high, the stock is down roughly 18.2%. So it hasn't seen too much of an impact during the overall correction. Right now, Shopify Shopify is expected to grow its revenues 29.7% on average for the next 3 to 5 years. So this is another hyper-growth stock. If we take a look at fundamentals, they are profitable and they are positive in cash flow from operations. Not only that, they also have a super strong balance sheet. They have about $7.9 billion in cash and short-term investments and less than $1 billion in debt. If we take a look at historical growth, in 2020, it grew 85.63. So we can see COVID definitely helped out this stock, as probably a lot of businesses were moving into that overall online e-commerce platform and more people started to sell online. But even before COVID, this company was growing at crazy levels. In 2019 was 47% and in 2018 was 59%. We're also seeing improvements in their operating cash flow margins. In this most recent year of 2020, they kept about 14.5%, and I do believe that's a huge reason why they have such a strong balance sheet. If we take a look at their most recent earnings, their revenue grew 110%. Let me repeat that, 110% compared to same time last year. But Shopify also has little markets. They have like the Shopify payments that has grown 135% compared to same time last year. Shopify Capital, if you're looking to take a loan, has grown 90% compared to same time last year. Shop and Shop Pay, which are their applications, have seen 26% growth on monthly active users compared to last quarter. Not only is their overall business doing well, but the other products that they're hitting are also seeing improvements. The third company we're going to take a look at is probably one of my favorites right now. This is going to be Crowdstrike. But before we go there, guys, let's take a quick listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Alright, so for those that are not familiar with Crowdstrike, this is the one in the cybersecurity world, right? They do products like endpoint security, security and IT operations, threat intelligence, and cloud security. And right now I feel like every other week we're seeing new talks about new cyber attacks. And I do believe this is a market that's going to continue to grow because of that increased threat. Crowdstrike right now is traded under the NASDAQ as ticker CRWD. It's currently sitting at $206.94. From its 52-week high, the stock hasn't really seen much of an impact, 14.5%, right? Definitely a nice correction, but not as big as some of these other stocks. It currently has a market cap of $46.72 billion. One reason I do believe this company has not taken too much of a hit is we're still seeing that increased threat of cyber attacks. For future growth, this company is expected to grow 29.9% on average for the next 3 to 5 years. Another hyper growth stock. You can see why I am thinking about increasing my exposure of this stock in my portfolio. Right now, Crowdstrike is not profitable, but they are super positive in cash flow from operations. If we take a look at their balance sheet, they're also looking pretty well, having about $1.7 billion in cash and short-term investments and about $738 million in debt. If we take a look at historical growth, in the past 3 years, it has grown his revenue each year by over 80%, 81.64 in 2020, 92 in 2019, and 110 in 2018. Even though this company is not profitable right now, one thing I am seeing is improvements in gross margins over the years and improvements of profit margins throughout the years. If we take a look at operating cash flow margins, this company is also improving. In 2020, their operating cash flow margins was 40% of their total revenue. If we take a look at this company's most recent earnings, their annual recurring revenue has grown 74% compared to the same time last year. We can see every quarter it tends to be higher and higher. Another thing I find super impressive about Crowdstrike's most recent earnings is 64% of this company's subscription customers have 4 or more modules. So the more modules you think a customer would have, it means the less likely that they are going to unsubscribe. 50% have 5 or more and 27% have 6 or more. This final stock, we're going to take a look at Square, and this is going to be the one I am looking in the fintech service, where I do believe Shopify is more in the e-commerce market. I do believe Square provides more financial services. Square, I do believe, is one that's great for both an opening economy and a closed economy. So let's take a quick look at the products they have. For if you want to sell either online or in person, they have online solutions. They also have point of sales or hardware to be able to sell in your restaurants or brick and mortar. And a way to manage your business, they have business and debit cards, they have invoices, they have business loans, bank transfers, connect with your customers, they have stuff like marketing, they have loyalty programs, they have messaging, ways to communicate with your customers. Next, they have management and pay teams. So if you're looking to start like a payroll, a time card, or even employee benefits, Square is there for you. They also own an application called Cash App, which is used for payments, for banking, and also using for investing. So you can see the huge fintech market that this company is seeing. Right now, Square is traded under the New York Stock Exchange as ticker SQ. It's currently sitting at $213. From its 52-week high, the stock is down 22.7%, and it currently has a market cap of $97.3 billion. This company is expected to grow its revenue at 13% on average for the next 3 to 5 years. So not a hyper growth compared to some of the other companies, but they are profitable and they are positive in cash flow from operations. If we take a look at their balance sheet, they're sitting at about $4 billion in cash and about $3.7 billion in debt. So almost a 1-to-1 ratio, but remember, they are positive in earnings and positive in cash flow from operations. If we take a look at historical growth, this is a company I don't want to look at in forms of revenue growth. I think the most important is gross profit growth, right? This is the better metric to look at Square, because Square, due to its investing market, it is increasing its revenues at super high levels, but those margins are super low. But we can see this gross profit is growing nonstop year over year. On May 18, Square did announce that they are doing a $2 billion offering note. They do mention that this note will be used for general purposes, which may include potential acquisitions and strategic transactions. I do believe Square has something in mind, and we're most likely going to see another acquisition in the near future. Like I mentioned before, gross profit is probably the best metric to look at in Square. It has grown 79% compared to the same time last year, and that's being driven by both their Cash App gross profit, which is up 171%, and their seller gross profit, which is up 32% compared to the same time last year. All right, so now let's take a quick look at the technicals. I just want to make sure none of these are overextended right now, because I do believe if they are overextended, it does increase the risk a bit. So we can see Twilio has definitely seen a pull down, and it's now sitting closer to its short-term and middle-term moving average, so it's not overextended. The same thing can be seen about Shopify, not overextended right now. Crowdstrike is definitely showing a bit of overextension at the moment, but it's not too bad. And Square, we can see, is sitting just like Twilio, pretty much next to its short-term and medium-term moving averages. All right, so next I want to take a quick look at valuation metrics, and here we're going to take a look at EV to EBITDA forward. The first thing is all of them have seen some crazy corrections. I do believe 3 out of the 4 have seen better corrections, and that's going to be Crowdstrike. Crowdstrike is now sitting at levels last seen, I want to say, in August, September of 2020. Square has seen corrections that are now things are looking at ones that are closer to July of 2020. And the other one is Twilio. Twilio is now seeing levels that is seen in around September or October of 2020. Shopify is probably the one that has least seen any form of corrections, but I do believe it's still sitting at attractive levels. So as you can see, all 4 companies are sitting at some attractive levels right now. There are some pros and cons for each, and later this week, most likely on Thursday or Friday, I am gonna purchase 2 out of these 4 unless something dramatic happens in the overall market. So I hope you guys enjoyed the episode. Take care and see you next time.